Hi everyone, it's Roland Kim here bringing you the Vancouver real estate market update for August 2025. The Vancouver housing market is one of the most closely watched in Canada, and for good reason. It's dynamic, it's competitive, and it impacts not just homeowners, but renters, investors, and even the businesses across our fine city. Today I'll walk you through where the prices stand and what's happening in the sales and inventory and how the rental market is shifting, the impact of new policies, and where I see the opportunities and challenges for the months ahead. So let's begin with prices. The benchmark price for all residential properties in Metro Vancouver is currently $1.165 million. That is down 2.7% compared to last year, and it's also slipped 0.7% in just the past month. When we break that down even further, detached homes are sitting just under $2 million on average, which is a decline of around 3.6% for the year-over-year comparison and about a 1% decline for the month-over-month comparison. Townhomes are holding steady at about 1.1 million, which is down 2.3% relative to last year, but seems stable. And condos are the most accessible entry point for first-time buyers, with the average price of $743,000, which is down 3.2% year-over-year. So the story is one of gradual softening. Prices aren't plummeting, but they are adjusting downwards and continue to have pressure on a downwards momentum. Now, when we look at the other side of the equation, sales and supply, we see that in July, just over 2,200 homes were sold, which is a 2% less than last year and a 14% reduction over the 10-year average for the month of July. At the same time, new listings came in at about 5,600, which is slightly higher than average, and active listings, that's the total number of homes currently for sale, are reaching around 17,000. And that is a big number. In fact, that's nearly 20% higher than last year and more than 40% over the 10-year average. So we've got more inventory coming to the market and fewer buyers interested in transacting. That's a real mismatch, and it creates pressure. We're already seeing the pressure on the pricing and the seller's expectations. The next key metric is balance, and that's the sales to active ratio for all property types, which is around 13.8%. Detached homes are around 10%, and condos are around 16%. Now, if you're not familiar with that ratio, below 12% usually signals a buyer's market, between 12 and 20% is considered a balanced market, and above 20% is considered a seller's market. So, based on the numbers, you would think we're squarely in a balanced territory. However, I am feeling more and more as it's a buyer's market. Certainly in the condos and townhouses, it's much more of a buyer's market than in the detached. It's actually a healthier market than I've seen in many years. It's just a lack of transactions. On the rental side, we're seeing some notable changes as well. The average rent in Vancouver, which is around $2,800, came down 10% compared to this time last year. For a one-bedroom average condo, rent is around $2,500, which is down 9% year over year. This is the first time in a long time that I've noticed where rents are trending downward and will continue to have a downward projection based on new rental supply hitting the market in the years ahead. So it really is a softening rental market. For renters, this is welcoming news. For investors, it might signal tightening margins, especially with higher mortgage costs, and really being realistic when you go to the market with a rental. So what's the mood in the market right now? For buyers, the biggest challenge is affordability. Even though prices have adjusted downward, high interest rates are making monthly payments tough to manage. Many buyers are waiting on the sidelines, hoping for the Bank of Canada to cut rates. And analysts are suggesting it may take at least a 1% further rate drop before we see any real changes in the momentum. For sellers, adjustment is about expectations. Homes are sitting on the market much longer, price reductions are becoming more common, and in some segments, like luxury West Side detached homes, competition is low. In other segments, like properly priced townhouses or East Vancouver detached, competition is heating up. Investors are also looking carefully, but pausing before they want to make sure that the opportunities they're seeing at the right price is the right one for them. Beyond day-to-day market forces, policy continues to play a big role. The provincial government has introduced changes like increasing density near transit, eliminating parking minimums, and tightening rules around short-term rentals over the past few years. That is having some real impact right now. The Broadway plan, for example, is expected to eventually add tens of thousands of new homes in central Vancouver and also a lot of rentals. These measurements won't solve the affordability problem overnight, but they are designed to gradually increase housing supply and stabilize what is now becoming a more mature product, real estate. For buyers, that means more choices in the future, and for current homeowners, it means being mindful of how new density and zoning changes may affect your neighborhood, your home, and the character and the values that are important to you. So let's wrap this up around risks and opportunities. Risk: affordability remains stretched. Even with modest price declines, with modest interest rate declines, home prices are still out of sync with incomes. Sales are weak despite high inventory, which could keep downward pressure on prices if the demand doesn't rebound. Interest rate uncertainty is the biggest wild card, with cuts taking much longer than expected due to the macro factors of what's happening in the US and tariffs. Opportunities: a balanced market finally gives buyers more breathing room. There are more choices, more chances for making offers, less competition compared to the frenziness of years past. First-time buyers might find entry points into the condo market. Move-up buyers might sell a condo, buy a townhouse, and upgrade into a detached is also an option. Taking advantage of the softer prices in this type of a market is ideal. For long-term Vancouver investors, they remain bullish on the marketplace for 5-10 years down the road. So to sum it up, prices are slightly down but stable, but are continuing to trend downwards. Sales are soft while inventory is elevated. The rental market is easing for the first time in years, and policy changes are laying the groundwork for more future supply that will have impact. Overall, it's a period of balance, with risks for those who wait too long on the sidelines, but opportunities for those who are able to act strategically. That's your Vancouver real estate market update for August 2025. If you'd like to dive deeper into what these numbers mean for you, your neighborhood, or your plans, let's connect. Send me a DM. I'd be happy to walk you through any of your questions. That's it for right now. See you in the future. Please subscribe to my channel. Have a